Tom, thank you very much for joining us in London.
Absolutely.
Great insights on the panel just now, and appreciate you joining here to have a bit of a debrief per se.
Great.
I think maybe just to kick us off, I know Quantum Capital Group need no introduction for our US network, probably one of the best known energy private equity funds out there that's active in the market, have been for many years, but maybe for our European audience who may not be so familiar with the group, could you just give us a quick overview, quick summary of the group and sort of a couple of your different strategies?
Sure, absolutely. So Quantum Capital Group, as we are now known, we recently rebranded from Quantum Energy Partners. So Quantum Capital Group, we've been around for about 25 years.
Mm-hmm.
And what we focus on is providing capital to what we call the sustainable energy ecosystem. So the energy value chain, right? And I spend most of my time on what we call our flagship fund, our main strategy, which is traditional energy private equity. Within that strategy, we focus on upstream, midstream, and energy transition and decarbonization. And I can talk more about that later. But that's our main strategy. We also have three other strategies, right? One is called Quantum Innovation Fund, which is a venture capital-like strategy. Think about that as being mid to late stage technology investments in technologies that are supporting the energy industry, including an emphasis on decarbonization.
Mm-hmm.
And then we have two structured capital or credit strategies as well. One is called Quantum Credit Opportunities, or QCO. And what QCO is focused on is providing senior secured first lien debt to energy companies that are having a harder time maybe accessing reserve-based loans, the
Mm-hmm.
RBL market. So think about that as in some way RBL replacement capital. And then the other strategy is Quantum Capital Solutions, or QCS, which you can think about that as being a strategic financing around maybe asset-based financing, preferred, structured capital, focused on helping upstream and midstream companies accelerate growth, sometimes via on-balance sheet or off-balance sheet financing. So
Mm-hmm.
that's it in a nutshell. Quantum's been around, like I said, for about 25 years. We've been fortunate enough to steward about $23 billion worth of our investors' capital. We formed circa 140 different platforms or portfolio companies over time. We exited roughly 100 platforms. We currently have just over 40 active energy platforms within North America and Europe. And the last thing I should mention, since we're in London now,
Mm-hmm.
is one of the strategies that we are expanding is our international private equity effort. And so we made our first investment internationally last year of size. I'll say we've invested historically, and I'm not counting Canada. Canada, we kind of throw into the North American bucket appropriately. But outside of North America, we made a meaningful investment last year, and we're looking to do more of that on the upstream side.
Okay, no, that's brilliant, and I think a really good oversight, and I think it leads nicely into my next question, which is, I think when over the past couple of years, we've been speaking a lot with US-based investors. Obviously, we've heard about the outflow of capital, but the sector's experienced there's less private equity capital available to the market today than there has historically been. I think Quantum, along with a few other well-known names based out of Houston, are some of the sort of stalwarts of industry have stayed and continue to deliver relatively strong performance. But the general sentiment is that these investors don't feel the need to look internationally, don't need to look across sort of beyond their own borders, because the fiscal regimes, the regulatory environment within the US and domestically is pretty stable. And there's no need to take that unnecessary risk per se looking internationally. But you are taking a bit of a different approach. Maybe you can share a bit more about sort of how you're taking that approach, why you're taking that approach in terms of international opportunities, where those attractive risk-adjusted sort of returns and whether those opportunities lie.
Sure. Well, so recognize it is a bit of a different approach. And maybe I'd start with the way we think about investment opportunities broadly. For us, it's about finding the right risk-adjusted return profile, less about scarcity of capital, because we have a view that if we find good investments, there's capital available, whether that be in our existing fund, whether we raise capital alongside the existing fund specific to a specific opportunity. So I think we'd start there. And so we had a view called a few years ago when we began looking at what was going on in the space internationally, majors, NOCs, IOCs with regard to divestitures, right? And the thought being that some of those divestiture programs were driven by, I'll say, strategy shifts, as some of the aforementioned pivoted, I'll say, to more of an energy transition type strategy. Some of them are just the regular way high grading of a portfolio. And as they continuously redefine what's core and non-core within a portfolio, we looked at that dynamic and then coupled with the dynamic that you referred to, which is capital leaving the space. Traditional energy capital not being as readily available as it had been historically. I referenced on the panel some of the pullback in private equity capital in the US. You're seeing that even more material, I'd say, internationally.
Mhm.
So we looked at that dynamic and we said, we ought to go spend some time and try to figure out if there's a good opportunity set that would merit us investing capitals. So we did that a few years ago, started that effort. I'll say we've been encouraged by what we've been able to accomplish, what we've seen since then. For us, it starts with people and teams.
Mhm.
And so we partnered with a team called Trident Energy last year to go and continue to build out what they already had in place, which is a sizable upstream platform, geographically diversified, trying to grow that platform as we speak, and then also trying to do more on the international upstream landscape. So we feel like there's a significant opportunity, and for the right opportunities, we'll find the capital.
No, absolutely. And are there any geographies that sort of jump out to you? I mean, we've heard a lot this morning about the uncertain environment in the UK. There does seem to be, from the minister's speech this morning, encouraging signs about the sort of the fiscal terms and the improving regulatory environment to attract investors back to the space. But I think it's generally been a deterrent for international investors coming in, just given the uncertainty and longevity of some of the terms that are in place. Are there certain jurisdictions? Is Africa appealing? Is Latin America appealing? Southeast Asia? I don't know. Where do those international opportunities lie, if any, or are you fairly opportunistic?
Look, I think we're fairly opportunistic. I don't want to put, countries on no-fly zones.
Yeah.
I'll say some that we all would naturally think about are jurisdictions in which we likely will not invest or not even explore investing. But more broadly speaking, I think we take each opportunity on a case-by-case basis and try to understand the above ground risk, how stable or not there is. That can sometimes bring about interesting opportunity, but I think we take it on a case-by-case basis. Trident, by way of example, has assets in Equatorial Guinea and they have assets in Brazil,
Mhm.
right? So we're very familiar with both of those jurisdictions. We've looked at assets all over the world with Trident and outside of Trident. We're very familiar and comfortable with other jurisdictions from an above ground risk standpoint, but we'll take it on a kind of a case by case basis.
Sure. Okay. No, I think to pick, that's really interesting. And I think to pick up maybe on some of the comments that you made on the panel just now, to change the tune a little bit, sort of around the fundraising environment, it's just be interesting to pick your brain on how Quantum are currently responding to the current ESG dynamics, how that's sort of changed the fundraising environment, what LP and institutional shareholders' appetite for the energy sector is at the moment, and just get an appetite of sort of where is that investment coming from, where are investors having to turn right now to raise capital, and how do traditional energy investors like Quantum Capital Group essentially tell the story of how fundamental energy is going to be for all the reasons that we've heard about over the past few days, sort of addressing the energy trilemma, delivering sustainable, affordable, reliable energy to the world. And obviously our economies are powered by energy. We need that sort of abundant baseload power readily available for us and when we need it. How do we tell that stories to LPs, to shareholders, to get them back on board and to stimulate, I guess, capital deployment into energy funds and sort of reinvigorate that space, if you like?
Yeah, absolutely. So a lot of questions embedded within that question. So stop me and pivot me if you'd like me to expand on any given point. Look, I think first off, our existing investors, I'd call them pragmatic and knowledgeable, right? They've been with Quantum for quite some time. They're very savvy on their own, and I think they understand the fundamental importance of hydrocarbons to the world economy, right? And so I think we'll start there. I think as we go out and raise capital with new investors, there sometimes is an education process. And what we, just lay it out with data, right? The data is self-evident when you look at it. And we talk about the importance of oil and natural gas to the global economy, and why from our perspective, we will need hydrocarbon for decades to come, not just years to come. And so you start with that, and there is some education requirement. We touched on it in the panel that there was an awakening, call it a couple of years ago, around energy security and affordability and how long this energy transition will take. And you're increasingly seeing, continued rhetoric around that. I think there's an article in the Wall Street Journal yesterday that's frankly around that. So I think there's that component of education. Then there's also explaining to them how we at Quantum are doing it in a responsible way from an ESG standpoint. We take ESG very seriously. We've tracked all kinds of data ever since inception. And then over the last several years, we have, I'll say, enhanced that process. We hired Kayla Diamond, who's our head of ESG. We hired her back in 2020. She came from outside industry. And so she's been with us now for a few years. And really under her leadership, we've enhanced our ESG reporting, our ESG diligence. We have an ESG annual report that we put out. We just released 2023. It's on the website. Anyone can go to it. You don't need a password. It's one of the first things you'll see on our website, which is quantumcap.com. And go read it because it addresses exactly what you're saying around the education component of hydrocarbon and its importance to current and future world energy demands. And then also our ESG, I'll say practices, policies, and our plan, and then our metrics, which are all out there for the world to see. Like we said, it's not behind a firewall. You can go and access it.
Brilliant. No, that's interesting. And I'm sure we'll have to go and check that out. But just finally then, you alluded to it on the panel, you alluded to it when we opened up today in this chat. Quantum have chosen recently to launch a couple of credit strategies. Can you just speak about the motivations behind that, why you're pursuing that strategy and the opportunities that you're seeing emerging in that space?
Yes, absolutely. So there are two, I'll say, distinct strategies. Quantum credit opportunities, as I mentioned, is you can think about that as being first lien senior secured debt to energy companies that, due to the pullback, I'll say, from the traditional sources, a la banks, are having a harder time accessing that capital. We saw a void there, but we could step in and provide that capital. So we think about that as I've mentioned before, RBL replacement capital, among other things. So that is one strategy. And then the second strategy is called Quantum Capital Solutions. And what that is really meant to do is provide financing or capital to upstream, midstream, other companies to accelerate growth. And in a world where these companies are increasingly disciplined as it relates to return of capital and where they spend their own capital, this is a way to accelerate growth outside of that. And so both those strategies have been successful. QCS run our second fund there. The first strategy has been very successful. And there's certainly a need for that capital in the marketplace.
Brilliant. Well, Tom, look forward to following the progress. Appreciate you taking the time. Good to chat with you, and we'll see you soon.
Enjoyed it.